welcome along to the first of our Sunday surgeries. This is the all-day auto-trade wealth Sunday surgery. Basically, we're going to look at some charts. I'm going to show you some a newsletter that I put together that some of you are subscribed to, and I hope the rest of you will subscribe to. Support and resistance levels for the charts for the coming sessions. Some areas to look for reversals. Some other things I want to show you is how we can read market balance, which is something I'll be teaching in the room. To let you all know, I'm running an educational trading room. At the moment, it's only for members that are into it, who are trading the auto-trade software with me, but I will be opening it up for 3 days a week soon. And it will be a paper subscription basis, so you can subscribe, but you don't have to sign up for a month if you don't want to. You can do it week by week. So it's a trading room with a difference. Say, for example, you can't make 1 week. You can opt out of that week and then come back in for the following week. So it's a slightly different model to what you see out there already. But again, I want to make it flexible for everyone so you can slot in with your time schedules. I mean, not everyone wants to sit there on a Tuesday and trade, so you might want to change it around and do a different day and a different week. So with that, let me just clear that. Okay, I want to show you the newsletter that I've sent out. So some of you, have any of you guys received the newsletter tonight? It should have gone fantastic. Okay, so there's a newsletter gone out to some of you already. Just to let you know what's in it. What I do is put it together on a Sunday evening for the coming sessions, using key support and resistance levels, and then looking for sort of areas of potential reversal and confluence, really, a confluence of areas where we can look for trades and confirm trades if we take them. So we've got a good week coming this week. It's a busy week. There's a lot of money being launched into the from the Feds, which I'll show you in a minute, and I'll show you how to access that as well. So let me just check that you're seeing the right screen. Yeah, okay, so you're seeing the newsletter. Okay, so basically I sent the newsletter out tonight. We scalped this crude inventory trade here. There's a trade here that we took on the crude futures contracts. The auto trader that I run took it automatically, and then we just managed it. And there's a video on the YouTube channel for Auto Trade Wealth that shows this trade. And the reason I stayed in this trade, basically we were counter trend trading because it spiked down. This is the 3 o'clock news announcement, this long red candle here. And this is it on a market profile, a market delta. It's actually contracts I'm looking at. This is how it looks on a contract basis, but if you look at the shape, it's exactly the same. And we actually took the trade of this on this breakout here. This breakout, my auto trader that I've designed, actually took us into a trade here, and we took 11 ticks out of it, which is $110 on one contract. And the reason I stayed in the trade, even though it was counter trend trading, when you get your newsletters, if you zoom in on these numbers, you'll see the amount of heavy buyers coming back into the market to drive this. So this is a drive out on high volume. That's what it looks like in a candlestick format, and this is what it looks like from the exchange on a contractual format. So you get a close idea of exactly what's going on, and it gave me confidence in the trade at the time because I have this on a screen above the one I'm trading on. So I've not taught much of this in the room as yet, but as the months unfold, I will be teaching you how to do this, how to use it, how to trade it, alongside VSA and support and resistance and the auto trader. So what we're looking to do with this indicator is confirm our positions and say, okay, that's a valid long. Let's stay with that trade, and we'll tap it out when it sort of starts to find resistance, which it did at the first deviation of this line here. So that's to give you an idea of what that's about for some of you who haven't studied it. Okay, so we've got coming sessions. This is the newsletter content. So basically what you get is this is a pound-dollar 6B contract. You've got key zones here. This is a point and figure chart, so I use this for projections of upside and downside potential. Now, I've also put these 2 little red lines here, are Fibonacci retracement zones. Now, the reason they're on there is they play not a key role, but they're something to draw your eye to look for potential reversal and resistance areas. So again, look, this is exactly at the top of the American initial balance for Friday afternoon, and that's our next stopping area. If price gets down to here in the coming sessions, I'll be looking for a continuation of this uptrend, or I'll be looking for a reaction between this area. And then we've got the news coming out this week. I've actually slotted the news into the newsletter for you, to make it easy. So if you just trade the pound-dollar futures contract, you've got in a very quick format coming session highs and lows and areas of support and resistance, as well as the news announcements that may move the market. So look, we've got the manufacturing PMI this week on Monday at 9:30. So this is going to move the market tomorrow. So there's going to be a market mover in the morning tomorrow on the pound. Tuesday we've got construction PMI. That's a market mover. All of the red ones coming from Forex Factory denote market movers, okay? And then we've got the 6E, same thing. I've done the same support and resistance zones. Support and resistance zones with the Fibonacci levels on there as well for you to look at. So it's something for you to think about in your trading. And these levels are valid. If they don't get hit tomorrow, they'll get hit one day in the week, I promise you. That's how it works. Okay, by looking at this and these levels, we're looking to where the exchange players are trading to. So we're trying to mirror the smart money, as Gavin calls it, is where we're going to be looking to trade with. And this is what the levels they're all looking at. Okay, so we've got the euro dollar here, a news announcement. Big news for the euro on Thursday. The minimum bid rate and the ECB press conference. So when Draghi gets on the microphone, normally it moves the market, but again, we're going to trade the reaction after the news, not into it. The yen again pushing down on this downtrend. I put two Fibonacci's on this, just to give you an idea of retracement zones. So look, we've made from this high, when we broke out this level here, we pushed down and then we've retraced to bang between 50 and 618. These two red lines are between 50 and 618 retracement on a Fibonacci level. Okay, and look, it actually stopped there, stalled, and then reversed. So what we're looking for here on the pound is the same sort of thing. It's driving up at the moment. We've made a low to high. It's coming back. It's retracing. We're looking to get long, as will some of the big banks and hedge funds. We'll be looking to get back into this continuation of this uptrend here. So this is a key zone at the moment for us for the next coming sessions. Okay, and then again for the yen, we've come down. The push, we're looking for a retrace up to this 50 to 618 zone and maybe a continuation push to the downside. Okay, we've also got the dollar Swiss currency, again trending upwards, pull back. We're looking for a continuation of this. We want to go back into this, to take this short, we want a retrace of this. Remember, if the pound and the euro are going up, the Swissy normally goes in the opposite direction. It's an inverse currency to the pound and the euro. Crude contracts had a big move in crude for the week. It's made a new low and it's being driven back up. And America's been on holiday for the last 3 days. And look, it's just there's still trading, heavy trading going on here. So again, there's I think might have been news out of Iraq or something. That's not Iraq, Iran. That may have spiked that, but I'm not sure. I'll just trade the reaction from the news, not into it. And again, so I've got all the US dollar announcements. Now, the main ones we're going to be looking at this week for the American announcements are the ISM manufacturing. That's a good market mover, especially on gold if you trade gold. The non-farm employment on Wednesday is a good one for gold. The ISM non-manufacturing will move the market. And the main one this week is going to be the non-farm employment change. So there's the non-farm employment coming this Friday. It's going to be a big one. And here's the gold contract. Again, gold moving, all these red news announcements will spike gold on average between 10 to 30 ticks. So all of these announcements can be traded on gold and you can make potential profit on them. Now, how do I know that? How do I know, okay, look, I'm going to trade gold this week. How do you know it's going to go 20 or 30 ticks? Well, what you do is you build an expectancy. Now, when I say build an expectancy, what I mean is if you analyze all of these news announcements, they come out every month. Okay, most of these come out every month and they move the market at the same time they come out. And so it's a way that the governments and banks and hedge funds can use to inject money into the economy, which is what they do. I mean, they use the cover of news to inject money into the economy. So again, we'll cover this a little bit more in a bit. We've got the ES, again, trending up, making all-time highs. Loads of more money coming at it. We're back to 78% on the retrace at the moment. So look, we've got an ascending W going up here, and then we've retraced to 78% on the fib. We'll be looking for a continuation of this uptrend somewhere. So we'll be looking to get long back into the ES. And again, all the US dollar news is valid for the ES, the gold, and crude. Excuse me 1 second. So that's the newsletter that comes out to you all once you sign up. So if you go along to here, let me go to that. Let me show you this. Okay, this is my new bells and whistles website. We're going to be launching soon with NinjaTrader, because I'm going to be an educational partner with NinjaTrader. We've got the price of everything on here now. The partners who I'm let me go to that. Let me show you this. Okay, this is my new bells and whistles website. We're going to be launching soon with NinjaTrader, because I'm going to be an educational partner with NinjaTrader. We've got the price of everything on here now. The partners who I'm partners with, so I'm a partner with TradeGuider, Minus Futures, Kinetic, NinjaTrader, and Multiple Monitors. For those of you that are looking for trading computers, this company is excellent. They're based in the UK, and their service and customer service is excellent. Videos are coming. I've got 2 videos on there at the moment, which is the pound dollar futures and the crude futures. Charts are coming. Contact pages. There are a number of numbers here now to contact us on. So you've got the US and Canada, United Kingdom, Australia, and the standard email address. The blog. If you want to follow us on YouTube, if you click the YouTube link, it will take you to the channel where the videos are now. So you can see the videos here. I'm posting video content regularly. So there's educational content on this video channel, as well as trades that the Auto Trader's been taking. So I want you to, if you can, go here and subscribe to this, and then you'll get an email as soon as that comes in. So that's something for you guys to look at. And again, all the videos are going on regularly now. We've got the first video, and they're getting better and better, and we're progressing nicely along with this. So let me take you back to here. Again, we have Twitter. I'm not using the Twitter to post stuff immediately at the moment, but I'm going to start putting trade alerts on here, so keep an eye on this. I want you to follow me on Twitter as well. So there's 3 followers at the moment. I need you guys in the room tonight to start following me on Twitter. It will benefit you, because there will be trade alerts going out onto it. So and they hit there instantly. As soon as the Auto Trader takes them, they will be coming to that as well. Okay, so that's something quite important. We have the disclaimer on the bottom. It's there, and that's what I wanted to say actually. Trading foreign exchange on margin is not suitable for all investors, and there may be some risk that you may lose some or all of your investment. Do not trade with money you cannot afford to lose. Full terms and conditions are on the Auto Trade Wealth website, and here is the disclaimer that is highlighted at the bottom for you all, so you all know where you are with trading and how risky it can be. Okay, building an expectancy, guys. Let's have a look at an expectancy, shall we? So let's go back to last month. Let's go back to the first week. And let's take the filters off. Let's do all of them, and we'll do, yeah. So first Friday, or second Friday actually, last month, non-farm employment change. Okay, it was a positive number, and it had a big effect on the currencies, currencies and gold. All of them basically spiked. The notes, the Nasdaq, the TF, they all moved. So it's a big market mover. Now, why would the non-farm payroll announcement, move the markets that much? Well, let's have a look. First things first, I'm going to show you this link. What I want to show you here is this link, and drop it in for you so you can save. I want you to save this as one of your favorites. So basically, this is the tentative schedule for the Federal Reserve. So let's do this. Let me see if you can see that. Paste, send. Can you all see that link, guys? Fantastic. I want you to click on that for me and then save it in your browsers. And then you can actually see when the big money's coming into the market, the smart money are at play. Now let's have a look here. Look, Tuesday is going to be a good day, 3 to 4 billion coming into the economy. Wednesday should be a good week actually, 2.7 to 3.5 on Wednesday. Thursday, look at Friday. Friday the 6th of December. $4.25 to $5.25 billion coming into the economy. All right, so let's see what happened the last time we had that much money injected into the economy. So if you go over here to all schedules and we look at November, what happened on the first Friday in November? Well, what do we have here? Friday the 8th. When was the non-farm payroll? In November. Let me just find it. Hang on. Let me go to here. So let's go to here. And I want to go to Friday the 8th, non-farm employment change. So in November. What do you know? Friday the 8th of November. What did we see go out? $4.75 to $5.75 billion were launched. So what's the effect of that launch, of that money? How does that affect us as a trader? Okay, so let's have a look at a chart. Okay, pound dollar. This is what I wanted to show you. So that's it. We'll find a way. We will overcome it. Don't worry. Right. So there's the news announcement. Look at that. That is a big. I won't say the words, but that is a big FU bar from the smart money. So it's taken it down. It's rejected. It's come straight back up here, and then boom, it's been sold from underneath, and it dropped. Well, let's have a look. It dropped 6071 down to nearly 80 ticks in seconds. These are 1 minute bars. Yeah. Just be very, very wary of trading this news announcement with your real accounts. You can get burned very quickly, especially on something like gold. This is the pound dollar, and this is a big mover for the pound, as it would be a big mover for the euro. All of the currencies moved. The yen moved, the gold moved, crude, they all moved. Everything went. And the reason that moved so far and so fast, well, we know, don't we? We've got a rough idea now. Why? How do we know that? Because we're looking at this, aren't we? We're looking at where you gone? We know on Friday the 8th of November, $4.75 to $5.75 billion were injected into the economy by the Fed. So it gives you an idea of what's going on. So again, going back to the spreadsheet, guys, you start to develop an expectancy. So look, for example, we know that was the Friday, and on that news breakout, it went from 6071 to 69 ticks. So what you'll do now is go to your spreadsheet. So you pull your spreadsheet up. This is your you're gone. We know on Friday the 8th of November, $4.75 to $5.75 billion were injected into the economy by the Fed. So it gives you an idea of what's going on. So again, going back to the spreadsheet, guys, you start to develop an expectancy. So look, for example, we know that was the Friday, and on that news breakout, it went from 6071 to 69 ticks. So what you'll do now is go to your spreadsheet. So you pull your spreadsheet up. This is your expectancy spreadsheet, and you go to the Friday. So we now know November, it moved on this the news announcement, which is red. It moved 68 ticks. 68 ticks. It moved to 68. Let's try that again. Format that cell. Format. We want a number. No decimal spaces, and OK. So it went 68 ticks, and the figure, the announcement was negative. Let's go to calendar, and I want to go to, where are we? November. Bear with it 1 second. Let's find November. So on November the 8th, the non-farm payroll announcement itself was a plus 204. So it was a plus, it was a positive, okay? So all we're going to do here is put capital P. So we know if we get a positive news announcement coming out of there, we could have an expectancy of up to 68 ticks of movement. Okay, now there are certain other factors you can put into that, but that is how you start to build an expectancy using a spreadsheet, okay? So anyone who wants a copy of this, just put in, send me a copy, and I can email you one of these. I mean, you're just going to have to fill it in yourself. But again, it's called building an expectancy. Now, if you work on an exchange, you're sitting at your desk, this is your job. This is your job to look at this, analyze this, and trade it accordingly. You'll be looking at this with an expectancy of what you're going to make on this trade, and that's why when there was so much volatility hitting the market, you know all the big players are looking at this. That's where they inject their money into it. Okay. So again, this is the reaction from that. This is the reaction of that news and that injection of money. It moved the currencies, all of the currencies, gold, crude, and the indexes. It moved everything. It was a massive day. And again, we're going to have that this week. Look, this Friday we've got similar money hitting the market. So this Friday is going to be a beast of a non-farm payroll again. So again, building an expectancy. Someone is asking how to follow me. If you go here, guys, let me show you this. I want you to go to the website, and down here you've got Twitter. If you click on this, you'll have to log into your own Twitter account and then follow me on Twitter. You can just hit follow here and follow me on Twitter. And then this is going to start to come alive soon when I start putting trades on it. So it's going to fly soon. So just to let you know, that's what we're going to be doing with it. Again, so the expectancy on the spreadsheet is what I wanted to show you. Now, wanted to go over. Now, has anyone seen this indicator I've been using, and is anyone interested in getting it? Because if you're interested, I can help you set it up. So the indicator I'm using for market profile, or market for TPO market profile, is this one, which is a actually it's going to crash Ninja because there's too many days on there. There's hundreds of days. Maybe not. There you go. Fantastic. Right, now what you've got to think about, the initial balance for this Friday. Remember, America opens at 1:20 in the afternoon. The initial balance here is this line. So what we're doing is putting these lines on. Now, I teach this in the room. So what we do every day in the room, we put the London session in first, and then at 1:20, we put the American session in. So this is the American initial balance. Okay, now the initial balance is the first hour of trading. All right, well, you might say, well, it starts at 1 o'clock. Yes, it does, but the open outcry pit starts at 1:20 in the afternoon. Okay, so this is what we're looking at. We're futures traders. This is what we're looking to do. We're looking for the first hour of trading, okay? And then here, we put the extensions on. Now, basically, this is like the sat-nav. I call it the sat-nav. It's a roadmap of where price is going to go to. And what happens when price gets there? Well, you're looking for a reaction. You're looking for a reversal, or you're looking for a continuation. And these levels play out again and again in this scenario because there's a large community of people trading this. So you know all the floor traders in Chicago somewhere are using market profile. And they're all looking at these levels. That's why we're looking at them. And why are we doing that? Well, they're the smart money. And I want to trade in their footsteps. I want to trade in their shadow. As Gavin says, let's trade in the shadow of the smart money. That's what we're looking to do. So look, we are here. This is, let's see what happens when it hits one of these lines. Now, there is another important line, which is the half of this line, okay? This half is an attractor. Now, this is how you do this manually. Let me show you this. To do this manually, if you don't have this indicator, this very cool indicator what you're seeing here, is you put a line at 120, vertical line at 120. then another one at 14.20, and you plot the high and low that price has made between that hour. This is called the initial balance, okay? Just follow along, it's not rocket science. The middle line, we're going to make a dot. Top line, we're going to make a 5. Bottom line, we're going to make a 5. Now, all of a sudden, we've got a roadmap with a bit of structure to where price may be going to and froming, okay? So let's look at, I can take this off there now, but let's get a broader look at it. It's been pushing down for the session, okay? It's been making lower highs, basically, from 8 o'clock in the morning. Consolidate. This is a typical non-farm payroll day. Look, it's ranged, very tight range, the whole session. The whole session with a tight range, because they know, all the traders know, the money's coming up the market later on. There's nothing to trade here. And then what happens? Boom, the lights go on, the frag goes up, the race has started. There it goes. Okay, so look, if we go onwards now, let's press play and continue on through this. Let's see where it goes to and bounces from. Now, I've not put the half extensions in, but this line here is a half extension of that initial balance, which is also valid. So we're now up to 20 to 4, 20 to 5 in the afternoon. So the half extension was a valid extension here. It's broke out. Again, volume decreasing at the bottom of the market. It's turned. And again, look how this is an attractor for price. We are on, what time are we now to? 7 o'clock at night. The session's about to finish for the day. So again, look, it's made it slow. It's just dilly-dallied on this line here for the whole session. We're pushing out. What time are we now? We're getting to 9 o'clock at night. Another hour's worth of trading. All the trap traders won't be closing their positions down for the weekend. So last hour, there's always a good bit of volatility. So all the trap traders trying to liquidate their positions. And then there's the 10 o'clock, we're out for the day, so we're flat. Again, look, the last hour here, 21, last little burst. That breakout there was good for 12 to 20 ticks, 27, no, 15 ticks. So a little 15 tick breakout at the end of the day on liquidity. Right, I wanted to show you this now. So we're in market replay. Let me go to another day. Now this day, I've actually put on the YouTube channel. So let me just bring this. Let's bring that into there. So I want to take the. Waiting for next. Okay, can you all see that screen, guys? So this is the strategy on a chart. It's a Renko chart. It's a 3 Renko bar chart. Okay, I'm going to enable it. Strategies, and I'm going to enable it over here. We're going to turn it on. I'm going to hit OK. I'm going to pull up that dome because I want to see the trades it takes. And we need to, hang on, strategies, enable. You're going to like this. And it's on, make sure it's in the right account. Yeah, okay. Okay, so when you turn this strategy on, it's paused. It starts in a pause state. It's not working as such, and we're going to test that same day to see if we get similar results. So at the top here, it's got the number of trades it's taking for the day, how many trades it takes, etc., etc. And we're just going to run it from 8 o'clock till 4 p.m. in the afternoon, okay? So this is a 3 Renko chart. We're going to run it through at 500 speed. We're going to turn it on first and foremost. Let's pull that dome back up. So it's taken a trade short there. Now this is the same day and same video you're seeing on YouTube, okay? So you're seeing the same thing here. All right, let me do this. Keep messing with the dome. Right, let's do that. What time are we at? 12:52. Still got a bit of time. Okay, so we're at 6 trades at the moment for 350 profit. This is one contract, 650 aside. Right, what time are we at? 15:33, half 3. Let me just pause that for a minute. Properties, let me take that down to, price rose 40. 40, okay. That's more like it. We can see the dome now. Right, so we want to do that. Let's hit play. So this is I'm going to show you some settings just by tweaking this, just a little bit. Changes the whole thing. So we're going to run it through till it's 10 to 4. 4 o'clock's our target to finish. 4 o'clock. Right, 16.17. We stopped it at 16.17. 8 trades for the day, $500. And that is, let's show the spreadsheet for this. That is a slightly different stop strategy for the one that's posted on YouTube, and I'll show you in a second. 15th of October. 15th. This is one contract at 650 as well, guys. October 15th. And generate, and we're going to look for trades. So again, we want dollar amount currency. So again, look, it's taken 8 trades here. First one at 8.36, last one at 15.47, 10 to 4, with a wider stop. Let me see what stop I've got on there in a second. I'll tell you what it is. I think it's a 15-tick trailing stop. It's leaving it wide, so you're taking more of a hit if you get stopped out. Look, $93 is the 15 ticks. But again, when it's trailing stops and it makes a long move, which currencies often do, you're capturing a lot of this. And even in some of the big winners, that was 162 we made on that one trade. You still left another $60 on the table. So again, it works inversely. If you were to manage that went 3 ticks in profit from 8.51 to 9.20. So you had nearly 40 minutes to manage this trade and lock in some profit. So let's show you something else. Let's go to now a 4 Renko chart. Data series, going to make that a 4 Renko chart. Okay. Same day again now on a 4 Renko. 8 o'clock in the morning. And again, this works on gold, crude, the ES, the TF, the NASDAQ, all of them. And it will take trade. The idea of this is it will get you into the trades, and then you manage your risk and reduce your losses. So let me do strategies. I want to see what stop strategy I've got on this. So let's do this over here so I can see it. Yeah. Yeah, so let me show you the stop strategy for this. In fact, let's just test this on a 4 Renko now. So we're going to do a 4 Renko chart, test it. Let's kill that. Hit play. We're going to start trading up here. So the pause will disappear. We're going to put it through at 500 times. Same time, 8 till 4 o'clock. Let's see if we have a better day than we did on the 3 Renko bar. So again, just by changing something simple like the Renko size, it makes a big difference. I do love that noise. So look, 2 trades, 331 this time. 3 trades for 475. You're done for the day at this stage. The people that are following, or that I'm training, that you'll be done for the at this stage of the game. 475 at 6 divided by 650. I don't, God knows how many ticks that is. Okay, where are we? 2. We are to quarter to 2. 475 divided by 6. 73 ticks that was. So you're 73 ticks for the day. Where are we now? We're quarter to 4, 10 to 4. One more trade. 4 o'clock, 16.20. It's taken 5 trades for $581. Let's have a look at the stats. So the thing I love about Ninja, you can analyze it. So remember this one here, these stats for this were on a 3 Renko. Took 8 trades, 2 losers for the full 15 ticks. Okay, so we had 2 losing trades. So you had a big drawdown to start with. And then let's generate the one we've just done, we've just tested. So this time we took 5 trades for 581 profit. That's what this was designed for. So again, if you let's try it on 2 contracts now. So let's go to the stop strategy. Now I'll show you how the strategy works and how it's set up, because you can still use this type of stop. If you have NinjaTrader and you have the full working version, you can make this strategy yourself, and I'm going to show you how you make it now. So this is how you make this stop strategy that you've just seen, chase price down. So this video will be going on YouTube, so you can watch it afterwards as well. So what I'm going to do is go to a new time-based chart now. So I want a new 6B time-based chart. I don't want a Renko chart this time. I want a minute. 5-minute chart should be fine. Let's hit OK. Any questions, guys? Are there any questions? File, new, chart. Let's try 6B, new. 5 minute, 3 days. Let's try and download this. Hang on. I want to show you this because it's interesting. And it will make you money. Aha, that's what I wanted. Okay. So the best way to design a strategy is to open up a time-based chart. What you do here is you click on Chart Trader. You can then access the strategies and create a new one. So what we're going to do here is create a new strategy. So I'm going to go here, and I'm going to go Custom. Now we're going to have a 15 tick stop. So first things first, we've got Custom here. We're going to make a 15 tick stop. What we're going to do here is right click anywhere in here, right click. We're going to do Manage ATM Templates. And then we're going to name it. So what I'm going to do is delete that and go 1.5 testing. Okay, 1.5 testing. Save. So if that 1.5 testing will now be down here somewhere. So look, sorry, what you do then is once you've saved it, you click on it and make it in that list. Now what we're going to do, that is now the strategy. So at the moment, if we was to go over here and pull up 15 testing, it's going to, every time we enter a trade, if that's highlighted, it's going to take us in with a 15 tick stop. But we're now going to define a stop strategy that will chase price. Okay. So what we're going to do is go to here, and I'm going to make a 122911. So what we're going to do, watch, is go Custom, and I want a profit trigger of 12. So when price goes 12 ticks in profit, I'm going to go to break even plus 2. So it's got to go 12 ticks in my favour to lock in 2. Now you change this around for different instruments. There's different settings and different strategies for different instruments. So you've got a different one for crude, a different one for gold, a different one for the ES, and that's what we're all working on at the moment to make these strategies better so we can lock in profit. So 12 to, then the next numbers are going to be 9, 1, 10. Now that's the stop strategy. Now at the moment we've not saved the stop strategy. So what we're going to do here is right click this and go Manage Stop Strategy Templates. So now we need to manage the stop strategies. We're going to name this as a stop strategy. So those numbers are 12-2-9-1-10. Okay, so the numbers are 12, 2, 9, 1, 10. Save. Hit OK. Now, same thing. This is the tricky bit. What you've got to do is we've now got to make 12, 2, 9, 1, 10 coincide with 15 testing. So we're going to come down here and look for 12, 2, 9, 1, 10. There you go, 12291110. Okay. We're now going to associate that with the 15 testing. So look, if 15 testing's there, and our stop strategy is 12291110, what we do at this stage is right click, manage ATM strategy, not the stop strategy, the ATM strategy. And then it says, look, 15 testing. If we save that now, if we use 15 testing from now on, it's going to have the stop strategy of 12291110. How do we know? Because look, if we highlight it, there it is. 12291110 is saved down here in this list as 12291110. It's now associated with 15 testing. If I put a trade, so that's okay, that's all good. If I go to here now and click on 15 testing, if I was to go enter a market here, so I was buy market, it would put that strategy in place with that buy order. Does everyone follow that? Okay, fantastic, guys, good. I'm glad some of you got something out of it. Fantastic, good stuff, good stuff. I'm glad you're enjoying it. Right, so that's how that works. So that's how you define a stop strategy in NinjaTrader. It's brilliant, I love it. Right, so let's go back to our chart, our execution chart. So again, in the strategy, the blues are skips. So these blue dots are skip trades. Now, in the strategy that I use and that I'm selling, the software that I'm selling, is you can actually define these to take more or less trades, okay? So it's totally definable. And again, your stop strategy is totally definable. That's what I love about this. Okay, so it's so totally customizable. And again, look, 5 trades on the pound dollar at 6.50 a contract. Happy Christmas. Right, let's test that strategy we just made. So I'm going to go to there. Now, what I should have told you is at the moment it's saved that as a 1 contract strategy, okay? I want to save that as a 2 contract strategy. So what we're going to do now is go to here. No, I don't want to install Octo. Right, so go to here. This, I want order quantity up here as 2 contracts. So 15 testing is now going to be 2. I need to save that because it wasn't saved before. So you right click on here, save 15 testing as a 2 contract order. So you're going to put 2 contracts at the market every time you order. Now what I do now is go to my execution chart, which is my Renko chart, which is here. I'm now going to put in the strategy, I'll do that here. That's for the members only. So we're going to do apply that. So up in the stop strategy this time, I'm going to put 15 testing. 1, 5. Now it's very important that it's written exactly as you've saved it, okay? If it's not, it won't work. So I've got 15 testing now as the stop strategy. I'm going to enable it. I'm going to enable it down here, make it work, hit OK. We're now going to go to, where's the slider gone? We want 6p, replay. Yeah, we want the little slider. Where are you? Okay. There's the slider. So let's bring you over here. Let's bring that chart back. For Renko, we want the dome. The dome can go here nicely. And what we're going to do is bring you over here. We're going to go from 8 o'clock again. This time we're on 2 contracts, remember? So we've just changed all that. You've just seen how to define a stop strategy. Now I teach this in the room as well. So you'll, if you sign up for the room, you will be taught all this stuff. You'll be an expert at it after a while. So. Right, so what we're going to do now is start trading. We're going to run it through at 500 speed. We're on a 4 Renko chart again. We're going to put it through at 500 and see what happens this time. So remember, we're trading 2 contracts now, guys. There you go. 3 trades at 943 this time. And you'll be done by 11:30 now. You turn it off for the day and go and enjoy yourself. Happy Christmas. So we're still running through at 500 speed. So look, we're skipping trades here as well. It's not taking these little short long trades here for the minute, but it's taken that one. Bear in mind, we've got a 15 tick stop on this. So that just made another profit. Let's see where we're going to now. What we're now at 3:30. Last trade of the day coming in. Okay, we're done. 16.20. We got in there at 57. This time we've made five trades for 11.56. There you go, people. Happy Christmas. That's what it's about. And with that, any questions, guys? Are there any questions on any of this stuff? Yes, Robert. Yeah, in answer to your question, mate, yes, you can take half off. So this was, so I should have said that. This is, guys, this is 2 contracts all in, 2 contracts all out. You could take half off here and continue to push. You could widen the stop and try and catch a longer move. If you're a swing trader, you can have a much wider stop and try and catch a whole move. Especially when, we all know, when price really starts moving, you can make it catch the whole move. Right, let's answer some questions. There are a few questions there. Okay, so right, is it possible to get partial profits? Yes, Robert. Yeah. Okay, Matthias. If you go to the website, you can go to. I told you, David, I'd use that, didn't I? I found that with my friend David Wilkinson on the phone the other day. That's funny. Yeah, good man. It's beautiful, isn't it, David? I love it. Right, so yes, guys. So if you want to find out more information and you're interested in learning about it and trading with it, go here for me. Where it says educational trading blog, you can put your email address in here and it will take you to another bit where you put your email address in again. You'll then be on the mailing list. Our purchase options at the moment are Auto Trade Well software is available for $3,000. Again, purchase options, there's one purchase trading room monthly. We have a monthly trading room that's coming. That's going to be for $97 a month. You can do it on a week-by-week basis. So those of you that own the strategy, so you don't want to do a week of a month, you can do it on a week-by-week basis. And all I'll do is just, if you're paid up for that week, you'll get the email with the link. If you're not paid up for the week, I just click that link off, and you won't receive that link that week. That's all I do. So I wanted it to be flexible for the members. So if you're not going to say you can only get in for one day of the 3 days a week that I'm going to do, you think, well, that's a waste of like $35 or $25 for that week. Well, I don't want you to waste that $25. I want you to be able to come in on another week and get your money's worth. So I want it to be flexible for the people that are in this project with me, for you to make money with it and to benefit you. I want you to get the education out of it. I want you to be successful with it. That's what we're doing. And the other option, for those of you that don't want to bite the bullet on the $3,000, I'm going to do an alert service where you'll get alerts, you'll get texts for these currency pairs at the moment. So we're looking at the Aussie dollar, the pound dollar, the CAD dollar, the euro dollar, the yen dollar, and the dollar Swiss. So we're going to do alerts for them. That's going to be $75 a month for all the emails. What I'm going to do is let it run on a server with optimized settings for each pair. And it will take educational trades, because remember, I'm not a CTA. It will take educational trade alerts that you'll get, and then what you do is qualify the trades in your own platforms and take or don't take them yourselves. It's entirely up to you. It's at your risk. It's your discretion. That is a discretionary trading method, but it's what you've just seen executed. Now, the thing I love about this, a lot of these trades, especially some of the bigger legs of the currencies, you'll have time to get in. So say it triggered a trade right there. It made $300. It went at potentially $300 in profit. If I sent you an email at 9:30, you got 35 minutes to get in to try and make $243. That's 6 ticks a $6.50 a contract. That's a lot of ticks. So you can catch these moves. 10.29, 10.15. If you're not paid up for the week, I just click that link off, and you won't receive that link that week. That's all I do. So I wanted it to be flexible for the members. So if you're not going to, say you can only get in for 1 day of the 3 days a week that I'm going to do, you think, well, that's a waste of like $35 or $25 for that week. Well, I don't want you to waste that $25. I want you to be able to come in on another week and get your money's worth. So that I want it to be flexible for the people that are in this project with me, for you to make money with it and to benefit you. I want you to get the education out of it. I want you to be successful with it. That's what we're doing. And the other option, for those of you that don't want to bite the bullet on the $3,000, I'm going to do an alert service where you'll get alerts, you'll get texts for these currency pairs at the moment. So we're looking at the Aussie dollar, the pound dollar, the CAD dollar, the euro dollar, the yen dollar, and the dollar Swiss. So we're going to do alerts for them. That's going to be $75 a month for all the emails. What I'm going to do is let it run on a server with optimized settings for each pair. And it will take educational trades, because remember, I'm not a CTA. It will take educational trade alerts that you'll get. And then what you do is qualify the trades in your own platforms and take or don't take them yourselves. It's entirely up to you. It's at your risk. It's your discretion. That is a discretionary trading method, but it's what you've just seen executed. Now, the thing I love about this, a lot of these trades, especially some of the bigger legs of the currencies, you'll have time to get in. So say it triggered a trade, right, there. It made $300, it went at potentially $300 in profit. If I sent you an email at 9:30, you got 35 minutes to get in to try and make $243. At 6 ticks $6.50 a contract, that's a lot of ticks. So you can catch these moves, 10.29, 10.15 to 10.29. Potentially it made 200. It actually made 20-something ticks. So you got from 15 minutes to get in and try and capture some of that move. That's how valid it is. 14.17 to 14.51. You got 40 minutes. That only made 6.25. But if you was managing that, which I'm teaching in the room, that would have been more profit. You wouldn't have left that many on the table. What I'm trying to teach my group is once you get 5 ticks in profit, take it. 5 ticks, 5 ticks, 5 ticks. And realistically, 30 ticks a day is easily achievable with this. We've just seen it take, what's this, 581. Let's do another generate, sorry. 2 contracts, there you go, that's more like it. 156, $156, 1,156. So let's do that in tick forward. So if we do 1156 divided by 2, 5 divided by 2 again. 289 ticks in a day, gentlemen. That's not a bad day's work on anyone's money, is it? And obviously you will need a full working version of NinjaTrader to trade this system. Okay, I'll teach you everything you need to know how to trade it and make you a success with it. Okay, guys, any other questions? Okay, we've been going for nearly an hour and a half, so I hope you've got something out of it. I hope you've enjoyed. I'll be doing a Sunday surgery next week, and I will be doing more of the trading room. So go over to the website and make sure you go onto this list here, because once you're on this list, you'll get all the educational stuff that comes out for free, and you'll get notifications of the blog. I'll also put you in on the Twitter feed. You need to go to the Twitter side of it, where you go to here and click on Twitter. Follow me on Twitter. So we've got 6 already, so keep going. Need some more followers on Twitter. And then YouTube channel as well. Subscribe to the YouTube channel, because I'm going to be posting, I'm going to try and make the blog a more educational video blog as opposed to writing stuff down, because I can do more with video and make it work and more of use to you with a video blog. So you can watch a video, learn of whatever educational content I'm putting in, and then hopefully adapt and apply it to your trading. All right, guys, so have a great evening, afternoon or morning, wherever you are in the world. It's been a pleasure talking to you all, and I will see you all again soon.